Hello guys, you are welcome once again to this channel. This is Trader X here, and in this episode, I'm going to give you a breakdown of my gold entry. All right, there is a particular trade. I'm still in that trade as I'm recording this video, but I would just want to give you a breakdown of the strategy I used to get this particular entry. Even though I've not yet seen the results of the trade, but I'm very, very much optimistic that I'm going to actually end up in profit. So, when it comes to trading, gold is one of the pairs people really don't want to, people shy away from trading and understand because of how volatile gold is, especially silver as well. Silver is also very, very volatile, all right, which means it needs fast fingers and people who are actually um, skillful in trading to be able to make profit. But I've taken my time to learn a strategy that makes me overly profitable anytime I take a trade on that particular pair. Um, and I'm not saying I'm 100% profitable in trading gold. No, unlike currency pairs like GBP USD and GBP JPY, where I'm very, very much confident. Gold is one of the pairs I'm learning how to trade, but I believe that this particular strategy is a very, very, very good one for everyone who is a starter. All right. And it follows the same strategy I've been teaching over the years or the weeks. All right. And I want to just give you a breakdown of how I enter the trade. And there are two particular strategies I use, but they are the same, just that they have different wordings, depending on which one works for you. If you've been following me, let me increase the size of the text. If you follow me, I've been teaching the May formula, all right, or the May concept, the May concept where I'm seeing that the M represents what? Market structure. You are looking at the market structure, and there we look at our time frame. The 4-hour time frame is what we use to check the market structure. And what does the market structure tell us? Show us. It tells us whether the market is in an uptrend or downtrend, which is the market structure gives us the direction, all right, the direction of the trend. And in trading, we know that the trend is your friend, all right? So direction of the trend, whether the market is in an uptrend or where a downtrend, all right? So if it's in an uptrend, what do? You look for buy opportunities. If it's in a downtrend, you're only looking for what? Selling opportunity. And if it's in a consolidation, all right, console, then what are you looking for? Stay out of the market. You have no business trading whenever the market is in a consolidation or accumulation stage. All right, so that's the market structure part. And I believe this concept is something people who have been following my channel are aware. All right, so I want to continue. And then after the market structure, the A is you are looking for the area of value. All right, area of value. Other people call what? The point of interest. Others also call what? The key zones. The key zones. And in this area, it just answers the question, where am I supposed to buy or sell? Right? Market structure will answer the question, am I supposed to buy or sell? So when the market is in an uptrend, you are looking for buy. The market is in a downtrend, you are looking for sell. But for the area of value, it answers the question, where exactly am I to buy or sell? So after confirming that, okay, if the market is in an uptrend, I have to buy, where exactly, which location am I to press the buy or sell, trigger or entry point? Is that okay? Yeah, so that's basically it. And that's the area of value. And there I use the support and resistance, the support and resistance zones, all right, as the area of interest. Then the E will be what? The entry trigger. Entry trigger. Now it answers the question, what will make me buy or sell? And I use the candlesticks. A full video of this particular strategy is on my channel. You can look at it. I'll add it to the description, all right, of this video so that I can just follow to watch a full breakdown of each of these steps, all right? And I use candlesticks to confirm my entry trigger. And the last E is exit, which is basically exits, which is basically my TP and my SL, my TP and my stop loss. All right. So this is one of the strategies I use, make concept. So I just go to the 4-hour time frame to give me an overall direction of the market, whether the market is in an uptrend or a downtrend. If you've been seeing here, I've been entering trade all this, so I've been trading gold for some time now. The last place I'm seeing here is on the last month, 8th of last month, all right. Then I took this trade, which hit my take profit, as you can see, 1:4, and that was on the 5th of May this month, 2026. Then I entered this trade, even though it almost hit my stop loss. If you can see, it almost hit my stop loss. Really, actually came back to hit my stop loss. So this one was a losing trade, all right. But then there's this one I want to also show you. So another strategy you can use, all right, and is what I call DLE. All right. I call it the DLE strategy. DLE strategy. All right. The D basically give us the direction. All right. And for this strategy, I think I have a note here. Let me show you with my note. This particular strategy is here. 3 things to look out for before entering a trade: direction, location, and execution. And the strategy has been shortened as what DLE. All right. And for the D, which is direction, we are looking at answering the question, do I buy or sell? You know, the direction gives you idea of what to do in the market, whether to buy or sell. Direction is basically the trend of the market. So you want to follow the path of least resistance by trading in line with the direction of the market, which is following the trend. So if the market is in an uptrend, you don't look for selling opportunities. And if the market is in a downtrend, don't look for buying opportunities. That means you are trading against the trend. And most of the time, you are going to be at a loss. All right. So this is the most important decision to make as a trader per time. Am I looking for a buy or sell opportunity? For direction, we look at the market structure. Right, we are looking at the market structure, whether the market is in an uptrend or downtrend. And if the market is in an uptrend, we only know the word only. We will only be looking for what? A buy opportunity when the market is in an uptrend. And if the market is in a downtrend, we will only be looking for a sell opportunity in this regard. You get that? That's direction. Then the second one is location. Location answers the question, where do I buy or sell? Just like the area of value. Is okay. So this is where we look at the key or value zones, which is the area of value or point of interest. It could be the support and resistance zones or areas. All right. So the support and resistance are not just lines. It's not just a line. For example, let me take you back to the chart. All right. If you are drawing support and resistance, it is actually a zone which we use the rectangle tool to draw. Instead of thinking it's a line, is okay. So support and resistance are zones, not lines. Is that right? So, or supply and demand zones. Others call it the premium and discount zones, right? It gives you the exact point to enter a buy or sell. Is that okay? And the last part is for execution. That is when to buy or sell. It requires that you confirm on the lower time frame after the price enter the key zones on the higher time frame. So, for example, on the 4-hour time frame, which is our higher time frame you traded for the 4-hour time frame, we check whether the market is in an uptrend or downtrend. All right, let's go back to the chart. We check here whether the market is in an uptrend or a downtrend. So let's check from this point whether the market is in a downtrend or an uptrend. So let's go back here. We can see from this point, this particular point, what are we seeing? We saw the price came down. Okay, let me use this particular tool, which is good here. So it came down, went up, all right, and it broke this particular high, all right. Then when it went down, it came back still within the looking like an uptrend here, still within this, all right. Then it went up again. Then it came to probably retest, almost broke it, all right, which tells us the market wants to change trend. So from this part, the market was in an uptrend, all right. But then when the price came down, went up, tested again. Now we came down to break the previous low here, all right, which means the market has tested and changed direction. If the price came here and went up, the market was still in an uptrend. But the fact that it broke this particular part or at this particular level, then we are currently in a downtrend. So it came down, you know, broke this particular low again. So we have a lower low here, all right, lower high here, all right. Then the price went back, then came to retest, went back, came to retest, all right. So currently the price is still currently in an uptrend, if you can see. Still currently in an uptrend, all right? Still currently in an uptrend. Let me make sure I bring all these things back. These drawings need to be cleared. Clear all drawings, they are good. All right, so we are seeing here from the higher time frame, all right, that here was an uptrend, more or less like downtrend. But here at this point, if you can see, at this point, the price is currently consolidating because it's stuck within these highs and lows, consolidating on the higher time frame. All right. So we drew our support and resistance zone, and here was a good because the price tested year one. All right. The price tested here. We put our support zone here, waiting for the price to come back to retest this point, all right? Then we can then look for an uptrend, a buy, all right? A buy opportunity. So we've waited all this when the price has finally entered my key zone on the higher time frame. So I now zoom down to the 15 minutes time frame, which is why I take trade entries. All right, 15 minutes time frame. When I got here, I noticed that the higher time frame one is exactly where the price has entered at this point. Is that okay? So now I've seen that the price can actually go up again. All right, we can now move to an uptrend and take a buy entry from this point. So I now look for there's a place to enter. All right, and then now what is the confirmation? What will cause me to press the entry? I use the candlestick, which is the entry trigger. The candlestick here is hammer candlestick. And if you've been following my channel, hammer candlestick is one of the candlestick I use to confirm my buy entries. So once I noted that, what did I do? I just placed an entry at this point, all right? Then my stop loss rightly below that hammer, all right? Then my take profit to the next, key zone. And this is the entry. And currently I'm inside. This is 1:4.69, all right? Literally 1:5 risk to reward ratio, which is a good entry. So I'm still in that trade, and this is a breakdown of how this trade, I entered this particular trade. All right. So if you want to understand better, you can go back to my channel and watch all the videos I've done. And this is just on gold. This same strategy can be applied to every currency pair: GBP USD, USD JPY, GBP JPY, Euro JPY, any currency pair at all. But I was just testing on gold because, gold seems to be a bit different from the other currency pairs in terms of volatility. But this strategy actually worked perfectly on gold. And that's how this is doing. So I'm going to hold this trade. Let's say to get to this point will be, that will be probably by 10 a.m. today. All right. So I'm going to just hold it and see how this trade goes. All right. If you were helped, if you have any question, you can just drop in the comment section and I would respond to you as soon as I chance on it. Thank you very much. Share this video to as many colleagues as possible and do not forget to subscribe to this channel for more updates. See you in the next video.